Hello, it is Friday and it is the 27th of July 2012. Let's take a look at silver, gold, as well as the Dow Jones Industrials. This trend line, which connects these three peaks, is the one that I've been looking at. Still, no news to go over. The support line, of course, is 26 and a third, which is calculated from taking the high of close to 50 divided by the low of around 17 and 3/4. That's a difference of about 3. You put that to the power of 38.2%. Multiply the low again, and that gets us 2632, which is an area that has been tested on now 3 different occasions. Big differences the first 2 times that it tested it had a big bounce above it. This time it's been really in this sideways consolidation range for about 26 up to about 29. And that's been the case now for about 10 or 11 weeks. Pretty much getting close to a full season of just doing a whole bunch of nothing. Still with this declining 18 period average. In fact, it hasn't even touched the 18 average of closing prices since back in here. It hasn't been above it since this point in here as well. At some point, of course, it will rebound and start making the higher highs and higher lows pattern, but you still got to be wary that this thing could easily break through and then obviously come down and test this lower area. I have no idea if that's going to be the case, but quite frankly, I'm either waiting for that or I'm waiting for bullish confirmation to the upside. So everything in this little middle here is just a bunch of nonsense as far as I'm concerned. Let's shorten this out. I was using the daily chart for silver, but now I'm actually using the 26 hour, which is just a, I don't know, 1.15 day chart or something. And the reason why I'm doing that is because it's been more than 100 days since this February top, February 28th that is. And I want to keep the top within this chart. So that's why I'm doing the 26 hour. And most likely you'll see this go to the 27 hour chart, 28 hour chart, and so on until this pattern has been resolved. As far as this trend line here is concerned, it's just testing that area as of now. It hasn't, of course, broken the trend line on the 26-hour chart. We'll take a look at gold later on this exact time frame. It has broken gold's trend line as it has been testing its first Fibonacci level, something silver, of course, has not done, but on any major upside moves, that is the next significant resistance level. The other pattern that I'm showing is from point A to point B, and for me to do that right now, I got to show this on the 9-hour chart. So let me bring this 9-hour chart up, and there we have it. So this was an area that was tested as resistance on several of occasions. You'll notice this on gold, like I'm stating on the 26-hour, which we'll show in just a little bit. But as of now, you're seeing how it's been holding the support level for quite some time, and now for the last few periods, it's been finding support at this level. I don't know yet if it's going to be successful support yet or not. I got to consider that if it really goes down below 27, then this is going to be showing that of a possible failed breakout. And if you have a failed move in one direction and it reverses, then oftentimes you can get fast moves in the opposite direction. Granted, the fact that this has been in such a choppy sideways action, it just may continue to be playing its choppy movements as well. But again, if we see a breakout above this level here, I'd be looking for this for the short term, to move up towards this 28 and 40 level. And if it finds resistance here, what I'd be looking for by the book is a move up, maybe come back, find some support, and then break it through. But if this area is not resistance, then that 30 area that was shown on the other chart, or this previous high, would be the next significant resistance level. Now let's take a look at gold, and we'll take a look at gold on the 26-hour term time frame. And as I've been stating, this is the constant hits while it's keeping this sideways action going within the gold chart. And if you look at this within the 18 average, you go above it, back in it, barely above it, below it, above it, below it, above it. As of now, it's just showing this choppy nonsense, and quite frankly, as long as it stays in this range of about 1540 up to about 1640 or so, 1638, then it's just playing this sideways consolidation nonsense. And the next Fibonacci upside level, if it does happen to break out, is that of 1685. If it can hold and stay above that, this being the second Fibonacci level, then that would tell us the selling from point A to point B is looking to be that of a failed move. But this thing gets really choppy on the weekly time frame, within a bull trend, of course, and this is the within bull trend is this here, but now this is the sideways consolidation pattern, so you can pretty much make like another ascending triangle if you wish. And it's been staying below this second Fibonacci level for many months now, but it won't break down as well given the indecisiveness, really strong that is. Clear breakout above this level is massively huge, for that would eliminate this bear market from point A to point B, and then breaking down below here, I'd be looking for a move down to about 1400. Let's finish this off within the Dow Jones Industrial Average. First, take a look at Dow on the daily chart. And what's going on is it's breaking above 13,000, and we're now at levels not seen since, well, obviously back in here, which is a bullish sign right now. But it's been significant how these two Fibonacci lines have played out. Not only was this bottom a significant level, which we'll see on the 3-day chart, but you had this consolidation period here. You find resistance, support, resistance, support, resistance, support. Amongst this entire run, question is this going to have a clear breakout above this pattern, maybe go up towards the previous high? If we switch this now up to the 3-day chart, this will take us going back to last year's major moves. Now, if you're wondering what this is, I'm going to explain to you what this was. This was the summer of last year. There was a lot of scary things going on because the United States national debt was pretty much approaching 15 trillion. Well, that's higher than that now. But back then, of course, there was a thing called a debt limit, and they had to extend it, and because of the fears of the debt, that's what we've seen, such a major capitulation move, and then such a very volatile consolidation period that followed it. Now, what did they do to solve the problem? Well, they used law books and decided to increase the debt ceiling. Yeah. Well, since then, of course, at market from last fall to earlier this year kept a pattern of higher highs and higher lows, breaking the previous high and then finding a 38.2% support level. Within the 18 average of highs, lows, and closes, for the last 10, 12 periods, or really 30 days or so, it's been staying within this band. But again, it's looking as if it wants to break free from this correctionary band, and then again moves above 13.1, 13.2. You'd have to think that this thing would probably, on the short term, come up to here, maybe have a little pullback, and then maybe come back and test the 2007 highs of 14,000. But it's a very worrisome thing at times. After all, we're going to have the debt issue come back to play again, as the debt ceiling limit is going to be an issue again at the end of this year. And you never know when you have those flash crash kind of days. But as far as price action is concerned on the short term, I'm more bullish than I am bearish on this right now. And thank you for tuning in to this video. I probably will not do a chart video this weekend. And take care.